Good evening, future Maryland homebuyers. Thank you so much for being here. My name is Jackie Muick. I'm the Advocacy and Communications Administrator with Maryland Realtors. I want to welcome you to the Your Home Buying Keys webinar. Assembled tonight, we have experts in the industry. We have Nakia Pickett, a realtor with Douglas Realty, Kevin Holmes, a lender with Homestretch at NFM Lending, and Catherine Kramer-Dale and Frank Bymonday from Maryland Department of Housing and Community Development. Tonight, you'll get an abundance of information to help you navigate and succeed in your home buying journey. This webinar will be recorded and sent out to all attendees in the next 2 business days. We encourage your questions and we look forward to answering them. Please post all of your questions in the Q&A box below at the bottom of your screen. And with that, I'll turn it over to Nakia.
Good evening, everyone. I hope everyone is wrapping up the summer nicely and, getting into this school year. Let's see, I'm going to share that. Okay. Do I have it? Do you see it, Jackie? My presentation?
Yes, we do.
Got it. All righty. So we're just going to dive. I'm a realtor with Douglas Realty, and I'm here to just give you, my standpoint on, the home buying process. I'm sorry, this thing here. I want to make it bigger. Okay. So just give you my standpoint on the home buying process and how I can help you and kind of be a spokesperson for, realtors out there, what we're able to do with you during the process. All righty. So to start off, just to give you a little bit about myself, I'm a realtor with Douglas Realty. Again, my name is Nakia Pickett. I'm a Air Force veteran. I spent many years in the federal government, and I'm also involved in a lot of community organizations. So one thing about me, I do love Maryland. I love the state that I live in because Maryland is comprised of just mountainous areas. You can you can go to a beach, you can go on a hiking trail, you can camp, you can go to waterfronts and, go to a lot of artsy environments. And, I'm a foodie, so you can go to a lot of restaurants and things like that. So Maryland kind of has everything, arts and, technology and medical. It has everything here. So I'm a, big fan of Maryland, just to kind of give you that background. But I've also worked in commercial real estate and residential real estate for some time now. And so I'm just gonna go into how as a realtor, I'm able to help you with the home buying process. All righty. So here I put a home buyer's map. So this is just, if you can screenshot it or anything, this is just a quick, flow chart, just to let you know from the start to finish. Once you meet with a real estate professional, all the way to closing on your home, these are steps that we take, making sure that, you go through every process of the home buying process thoroughly, and, just make sure you touch all bases and get the process going. 1 second. All right, so first we're going to talk about the benefits of home ownership. I've been a home owner for about 20 years now. And so one thing that I can tell you is before you decide to buy a home, you want to make sure that the decision is, you want to make sure you're deciding to buy a home, and that's the thing that you want to do right at that moment, right? I tell people, they're always asking, when's the right time to buy a home? I say, whenever you're ready. It kind of doesn't matter what's going on with the market, because if you have a realtor, lender, and everybody by your side, doing what they're supposed to do, everybody's going to, make sure you're informed through every step of the process and, kind of get you into a situation that'll fit your needs at that time. So once you decide that you want to buy a home, that's the best time. So the benefits of the home ownership, you get to build equity. So once you buy a home, the longer you have your home will increase in value. So that is something that you'll be able to leverage over time, the time span that you have it. Home ownership provides stability. So we know about rent going up year over year. Home ownership provides the stability of knowing what your mortgage will be. So a fixed mortgage payment will kind of give you better control over your finances and kind of know, what to expect. And, we do have an awesome lender on who's going to, talk to you about that mortgage process. Tax benefits. There are tax benefits of home ownership. You want to make sure you get with the tax professional about that. Freedom and control. You'll be able to do whatever you'd like with your home. You'll be able to, I've knocked out a few walls in my home, and you'll be able to paint and just add different aesthetics, and just kind of make your own home, your sanctuary, something that you love and desire. um, Long-term investment. So a lot of people buy property to be able to have that home, land, property, or whatever to, transfer through their family. This is something that, I think is great, especially when you're doing family planning. Just ensure that, your family has something, that is stable to be in, if anything happens. So next, we're going to talk about getting pre-approved for a loan. So getting pre-approved as a realtor, once you decide that you want to buy a home and you decide you want to just embark upon that process, it can take a different amount of time for, each type of client that we have. But the first thing I'm going to tell you to do is get pre-qualified. The first thing, you'll talk to a lender here on this segment, but getting pre-qualified pretty much lets you know where you stand financially in being able to purchase a home and how much home you're able to afford. Also, during that process, you're going to know what documents that you need to gather in order to, submit a complete application. And you'll just be in a better position to know exactly how much home you can afford. If you need to, if you want to put it off for a while, go back, save some more money to be able to put more money down, you can do that. Or nowadays, with a lot of the grant programs and things we have out there, you don't need a lot of money up front. So getting pre-approved will let you know where you stand with all of that. Alrighty, so identify your needs and wants. So what you want to make sure you do, once you decide to buy a home, you find the realtor that you want to work with, you have a lender, you know what your financial position is. You want to make sure you know where you want to go. Okay. Scope out different areas where you want to settle. Make sure that the areas have accessibility. They're able to fit your life. If you like to live close to a grocery store or a gym or, schools or parks and things of that nature, if you have pets or animals, and you need to be able to, have them roam around, have a backyard. You want to make sure that you start to identify the areas that work for you. Write down a list of your non-negotiables so that way your realtor can know where to stay away from. Okay. We're better to help you when we have all of the information that we need up front. We do most of the looking when it comes to really, looking at the our multi-listing system to see what's out there, just to see what fits with you. You're also able, if you find something, call your realtor, give them the address, and we're able to get a lot of information on that as well. Okay, next after you do that, you're gonna go house hunting. So house hunting is a stage you are actively searching for the home. So the list that you put together, like, I want this type of home. I want a single family home, or I want a rancher, which is a one floor, or I need a basement, or, all that list of criteria that you put together and you give it to your realtor. What we do is we come up with a list of homes that fit your criteria, fit your budget, fit the area that you want to be in, because we can look in multiple areas at one time. And then we're able to come up with that listing and, take a day. And I normally give my clients up to, from 3 to 5 homes. Sometimes if they're really looking, if they're in a time crunch, sometimes we may look at 8 homes in one day. But I'm able to find those homes, fit what matches their criteria, and then go and you're able to tour. When you're touring, you're able to go in and take notes and take pictures and just kind of see what works for you. So house hunting is that's the fun part of the process. I know a lot of my clients like the house hunting part. So after your house hunting, you're going to make your offer. So after you've seen all of the homes that should fit your criteria with your realtor, and you've talked to your lender about, what areas based on taxes in the areas that you're able to, you know, basically put a contract in on, that's when your realtor will come up with, we initiate the contract, the offer for purchase for the home that you'd like. Okay. Once we do that, we come up with the purchase price with you. We look at the last sold homes in that area. We come up with an analysis of, how much you should be paying for that home. And that's where our negotiation skills come in. The financing terms that'll come from your lender, but we are able to put that in the contract for you. The earnest money deposit, normally in the state of Maryland, is about 1%, but you're able to, depending on how serious you are about the home, you can, put as much as you like just to ensure that you're getting that home. Any contingencies like a home inspection, financing, appraisal, we're able to put that in the contract. I will let you know that currently 80% of contracts that have been accepted in the state of Maryland have have inspections included in the contract. So a lot of, during the time of COVID, people were just kind of buying homes with not a lot of contingencies attached to it. So nowadays, we're shifting into a buyer's market. We're pretty much settling in there now. Homes are staying on the market for just a bit longer than they were before. We still have a very strong real estate market in Maryland, but with a buyer's market, that just means that the buyer has a little bit more leverage in purchasing a home, meaning that the homes, by them sitting on the market a little bit longer, the seller may want to, be able to entertain different offers, and you might have a bit more leverage in getting the home that you want during the season. All righty. So we also put the closing date in. Right now, it's taking about 30 to 60 days to close on a home. It's averaging about 27 days for a home that's put on the market to accept a contract. And the process can take, and again, depending on your financing, anywhere from 30 days to 60 days to actually close on your home. All righty. So we're going to also look at items that you want in the home, like the appliances and things that are attached to the home, or, sheds or things that come, that are on the land. Your realtor will do all the negotiation in that process, put this contract together, review it with you. You're going to sign it, and then your realtor will submit on your behalf, and you'll be able to find out if your offer was accepted or not. All righty. So once your offer is accepted, you're going to schedule and perform a home inspection. First, I want to say a lot of people get home inspections and appraisals mixed up. So the reason for a home inspection is basically you're going to have a licensed home inspector coming to look through your home. They're looking at property condition. They're looking at the structure, the roof, electrical systems, your HVAC. They're looking to see if there are any environmental hazards in the home. They're looking to make sure your electrical is all good, your plumbing's good. So once you move into the home, that you have a good working home once you're in it. An appraiser is responsible for telling the bank what the value of your home should be, depending on the structure and the size and square footage of your home, based on other homes that have sold in that area. So the appraiser will tell the value. Your home inspector is looking on the inside of the home primarily and just making sure everything is safe in the home. So I always recommend my clients get a home inspection. Nowadays they're running about, once you put an offer in, about 5 days to get an inspection. So your realtor will let you know to be financially prepared for that. Inspections can run you about a couple $100 just to get them done. All righty, next, after you get your home inspection, and if you find things on your home inspection that you don't like, then it is the job of your realtor to negotiate with the seller's realtor or the seller, just to basically let them know things that were found in the home inspection, because you get a very comprehensive report from the inspector. Okay, the report's going to go over all of the major systems in the home, the basically letting you know the life of everything in your home. Once, if you find things that are unfavorable, your realtor will go back and inform the seller, hey, these things need to be fixed or updated, and that's when we use our negotiation skills to kind of get you what you want. If you don't find anything, you're fine with the condition of everything, then we, make sure we communicate that as well. Alrighty, so that's done. We close on the sale. You again get your final documents together. You're going to make sure your lender's going to, make sure, review everything before your loan is actually put through to get cleared. Your closing costs, those things will be, accepted when you get to your closing table. So just look at the things here. Your funds are transferred from the lender to the seller. You do a final walkthrough either the day before or the day on your closing, and just make sure that everything in the home is in the condition that, that's acceptable to you. And once everything is complete, you receive the keys to your home and you officially become a homeowner. All right, so I went through those kind of quickly. So I'm going to go through once more, just briefly, and just open it up for any questions that you may have. So the first thing, deciding to buy a home. Make sure that that's something that you want to do at that time. Not even really, depending on what's going on in the market, because the market's going to do what the market does. Your personal family home, your needs will dictate when you need to buy a home. When you're working with the right professionals, then they'll be able to kind of, get you to where you need to be with purchasing a home. Also, I want to say, make sure that you find a realtor and a lender who are local, okay, who have boots on the ground, who know about the areas that you're looking at, who can give you some real day-to-day data and analysis on the homes that are selling in the area, what type of home is right for you, where to find certain homes, your lender, what type of financing is available for you, what kind of grants that you can get, what type of financing you fit into. Right now, people are using more, conventional loans, things like that. Make sure you get with your lender about that. But AI is great, but I always tell my clients AI doesn't, not to hate on AI or anything, but it doesn't have a lot of the, for people that are on the ground working this every day, a lot of the up to date data that you may need to know when making a decision. So make sure you get with a realtor that is well versed in those areas. As for me, I operate in Anne Arundel County, Howard County, Prince George's County, Baltimore City, and Baltimore County primarily, but I go all over Maryland. So just make sure you're with someone that knows the areas. Getting approved. Want to make sure that once you talk to your realtor, you find someone that you can work with, that you get with your lender, and your lender is able to, communicate with you and basically let you know everything that you need to get approved. Make sure you do your due diligence and getting all of your paperwork together. Because once that part is over, that's a big chunk of the process that'll make you feel a little bit better so you can really start house hunting. Identifying your needs and your wants, making sure that you have everything in their home that that you really need. Seeing how long you want to stay in the home. If this is just a starter home for you, it's a forever home. Just making sure you're really identifying your needs and communicating that with your realtor. Going house hunting, which is a fun part for a lot of people, but making yourself available to go on house tours with your realtor, and also to not make it an elongated process, kind of really focusing on, hey, I only have a few weekends or a few days to do this, and just make sure you're really focused on the areas that you want to be in, and you're not like perusing the entire state of Maryland. Making the offer, your realtor is going to help you with that and get you where you need to be. Scheduling your home inspection, your realtor can give you some people for the home inspection that they may know, or have in their Rolodex, or you can find your own home inspector. Closing the process and getting your keys. You have a title company that's involved with you. They're going to basically, inform you of everything that you need to have, and your realtor and your lender will be, holding your hand every step of the way. And let's see, I had some notes here. We talked about we're going into a buyer's market. 40.7% of the homes listed now are sold for a little bit lower than the list price. So whatever the price is listed as, 40.7% of them are selling for a little bit less than that. So that lets you know we're shifting into a buyer's market. And basically, the time to buy a home is whenever you're ready. So if you have any questions, please let me know.
Wonderful. Thank you, Nakia. We are actually running a little bit short on time, so we're going to go ahead and go straight into Kevin's presentation, and we'll do the realtor and lender Q&A at the end of that. So attendees, if you have any questions for Nakia, please put them in the Q&A box, and we'll come back to them at the end of Kevin's presentation. Thanks so much. Kevin, take it away.
Great. Here. All right. Nice to meet everyone. My name is Kevin Holmes. I'm with NFM Lending. I'm the branch manager here of our Towson office. I know we're rolling into dinner time, so I'm going to keep this short and informative and just give you the meat and potatoes here. Um, First and foremost here, just again, thank you for spending the time with us later in the evening. A little bit about NFM. We're founded in 1992, start off as a small broker. At this point right now, we're the number 10 largest lender in the country, largest lending employer in the state of Maryland as well. Licensed in 49 states, but we have a very large emphasis here on the state of Maryland, Delaware, Maryland, Virginia, kind of the whole DMV area. We are also an approved agency seller, which means we're a direct lender. We facilitate everything from origination all the way up to post closing, and even potentially servicing the consumer after the consummation of the loan. Great company, local, super important. As far as key points on what you should look for in a lender, a lot of things are very important. Maybe starting at the end, unusually. First, you want to have a good connection with them. Deal with someone that you like, obviously. I think what's really important to that is, you know, identifying a lender that has a really good, strong reputation. Not sure if a lot of people are familiar with us or have heard of us, but I think locally they have, maybe not necessarily so much nationally. But just to let you know, NFM is our acronym for National Fidelity Mortgage, and we're based here in Linthicum, Maryland. We have a great reputation. I certainly recommend everyone check us out online locally. You'll see we do a fantastic job. A lot of business in Delaware, Maryland Valley. Transaction control is really important. As a direct lender, we pretty much control everything from start to finish. So we're not really using any third parties to get approvals. Everything is done in-house. So it usually welcomes a pretty quick closing from start to finish because we control the entire transaction. Locally, again, we're in the state of Maryland, so we know a lot of the nuances of, closing on a property in Ocean City versus, Baltimore. Leaseholds are a very unique thing to Baltimore. A lot of out of state and other national lenders may not be familiar with. And then programs, of course. We are what we consider I'd say a mid-cap lender. So we have pretty much the entire gamut of loan programs from start to finish. And I think we're perfectly sized where we can still give the kind of boutique service that you need for a consumer, with also having the large national presence and loan programs to facilitate everything. Talked a lot in the last segment about pre-approval versus pre-qualification. So this is probably one of the most important things. A little different from lending on the real estate side. They get to show you a lot of the nice things with regard to real estate, meaning homes and properties, tours, all the really exciting things. I think unfortunately a lot of consumers are hesitant to start the pre-qualification or pre-approval process just because they feel it's going to be difficult. But I can reassure you things are very simple these days. The pre-qualification process, a lot of it is automated with a web application that we use, which takes about 3 minutes to pre-qualify. If you prefer to speak to someone, which we love doing, we could also take the interview over the telephone, have that conversation, and then basically get back to you with your lending options. Process is very streamlined and very simple from what it used to be. So, the main thing I, again, want to reinforce is from a consumer perspective, find out what you qualify for. It's very important at the beginning of the process to really understand things before you go out and start touring homes. It's a much simpler process than a lot of people make it out to be. So from that perspective, again, I wholeheartedly, would definitely push people to speak to the lender as soon as possible. We normally recommend about 90 days prior to going out and touring homes. And the reason we do that is because you want to be able to identify any issues that might prevent you from touring a property later on. There's so many times when we speak to a consumer and they literally just applied online and they want to go tour a house tomorrow, but once we get to the pre-approval process, we might find that there could be some issues that they might have been able to identify 30, 60, 90 days prior to actually applying. So again, I recommend apply with a lender well in advance of going out to tour a home. With respect to that, the realtor typically is also going to require that you have a pre-approval. That way they know that you're qualified and they're going to go take you out to look at homes. With regard to the pre-qualification, there are kind of two segments to it. There is a pre-qualification, which is basically just you as the consumer applying with the lender, completing an interview, and from there, us verifying some basic information to ensure that you qualify. The pre-approval process is a little bit more detailed, where we're going to start gathering some documentation to basically validate the information that we've taken from the actual interview. Part of that process here, with the actual pre-approval process, is basically, again, completing an online application or taking a telephone interview. From there, we'll look at a credit check. I just want to kind of outline this as well. With regard to the credit check, we pull what's called a soft inquiry. So there's no negative impact on the credit. You're more than welcome to shop around. Common misconception on credit inquiries is, unfortunately, a lot of consumers think, once they have a credit inquiry, their scores are going to drop 20 or 30 points. Uh, that's just not factual. A lot of misinformation out there. So I definitely recommend you do your own research on that, and also look at the soft credit pull checks. Again, zero impact on your score. It allows you to shop around with confidence. So, that's one of the major hurdles that we run into with a lot of our interviews on consumers. They're very hesitant to have their credit inquired or pulled because they think that their scores are going to drop. But you have to remember, in order for you to get pre-qualified or to address any issues you may have, in the beginning of the process, you really need to know what your credit looks like and what you actually qualify for. So again, with regard to credit inquiries, do your research. I would not be hesitant on that. It's a really important part of the process. Employment and income is another thing that we would take on the interview. So typically, we're going to look for a 2-year work history on most loan programs. There are exceptions to graduates. So if you're coming out of school, we completely understand you're not going to be able to have a 2-year work history. So there are some granular details that we can get into on that on another session. Another important thing are assets. Even though we have a lot of loan programs that don't necessarily require a down payment, it's important to save what you can prior to looking for a home, because even if we can do the transaction with no down payment and also potentially paying your third party closing costs, which we can do many times, you're still going to have some expenses moving into a home, like maybe some minor repairs, or you've got to buy a lawnmower, furniture, all of those things. So I do think it's important to save a little bit of money where you can, even if we're going to provide you with down payment assistance and some of those other items. Which leads me kind of to my next section here. What type of credit do I need? So key question, piggybacking on what I just went over there. We don't necessarily have a minimum credit score. A lot of our government programs, meaning like our FHA and our veteran home loans, we comply with FHA and VA and agency guidelines on that. So we don't institute any, NFM lending overlays to make it more restrictive for consumers. The FHA and VA don't necessarily have a minimum credit score, but if you're looking for kind of a good qualifying score that most consumers qualify on, normally a 620 plus will get you qualified depending on what your income is. But again, we have options for less than 620 credit scores for VA and for FHA. FHA loans, minimum credit requirement for those for just the 3.5% down payment is a 580. So again, not to say that we can't do loans with less than a 580 credit score, but if we do, it's going to require more than a 3.5% down payment, which is usually about a 10% down payment. Conventional loan programs, a little more restrictive. Usually you're looking at a higher end credit score of 700 plus to qualify for one of those loans. And then we also have our USDA rural housing, which lends up to 100%. Just like veteran home loans, there is no down payment required with a veteran home loan. Our FHA loans typically require about 3.5% down. So, you can get into a home loan with anywhere from nothing down using a down payment assistance program, all the way up to, 3% for conventional or 3.5% for FHA. Every scenario is going to be a little bit different, but to outline the down payment assistance programs, we do partner with the Maryland Mortgage Program. So we do offer a considerable amount of loan programs that allows you to get into the home with no down payment. In addition to potentially offering you some lender options where we can actually pay your third party closing costs. How much do I need to close a loan? Kind of just went over a lot of the down payment options there, and why it's still important to save for closing costs and any expenses that you may have after settlement. A couple of neat things we do: quarterly workshops, very similar to what we're doing now. Probably a lot more depth and detail because of the lending process. There is a lot that goes into it as far as qualifying you. We generally have quarterly workshops once a quarter, and we'll push out text message or email campaigns to people. They can register online. We also have some in-house in conjunction with the ones that we publish on the internet. So if you're looking to get more granular information on this, by all means, please register for our next event. You can also contact us directly if you want kind of the more personal approach to it and just speak with one of our lending officers here. We can take a full application, let you know what you qualify for, and then really go over all of your lending options there to kind of put you on the very first step, which is getting pre-qualified, and then potentially connecting with a realtor to go out and start touring homes. Here's my contact info. We'll distribute this after the meeting. So if you guys have any questions, you want to reach out to us direct, or you really just want to apply and see what you qualify for, you can absolutely do that. That's just about it.
Wonderful. Thank you so much, Kevin.
No problem.
All right, we do have some questions that have come in the chat for both Kevin and Nakia. So first, how do I figure out what's a good purchase price for me? How do I tackle that?
I can answer that one. Okay. So what I always ask consumers is you should normally walk into getting pre-qualified with two payments, right? You want to look at what your floor payment is and then what your maximum payment is. So meaning every consumer has a desired payment of, what they would like to pay, right? So let's say, for example, your desired payment is $1,500 a month. So that's normally what we try to extract from our initial interview to say, where would you like your payment to be? And then secondarily, we always say, well, what's your ceiling payment? And we ask that because a lot of the times you'll start touring homes and your desired payment may not give you the type of home that you're looking for. So a lot of consumers can understand pretty quickly once they look at 3 or 4 houses and then they look at their desired payment to say, well, wait a minute, my desired payment was $1,500, but this home that I'm looking at is probably going to cost me more around $2,000. So I always explain to them, you really should, look at this from a 2-payment perspective of, what would I like my payment to be, and then, what's my ceiling payment? So if I see something that I really, really love, I know that I can just kind of work down from there, if that makes sense.
That does. Nakia, do you have anything to add?
I do. I also want to say, as a realtor, I always tell my clients, just because you find a home online with a specific purchase price, that does not mean that's what you're going to pay for the home. As a realtor, when we're going out with you, we take into account the time that the home has been on the market, any issues that we find once we go and tour the home, the appraisal. If the appraisal is a major component in determining really how much you're going to pay. If you have a good realtor on your side, they're going to protect you in the contract before you get to the appraisal process to make sure that you don't we want to make sure you underpay and move into the home with equity. So just because you see a number out there, that does not mean that's what you're going to pay. So good realtor and lender on your side will help you lots.
Yeah, and I just would piggyback on that for a lot of consumers. We have a lot of digital advertising that goes out there, and I'm sure we're speaking to some Zillow recipients here that, that had applied with us previously. So One thing just to be clear on, if you are floating around on the internet and you're applying on a lot of these websites, 9 out of 10 of them are publishing payments based on a 20% down payment, in a very low fixed, interest rate. So again, those rates are attainable, but keep that in mind. A lot of those payments that you see published on a lot of the third party lead sites are going to incorporate a 20% down payment. So you don't want to be surprised when you start talking to a lender and you're like, oh, I saw this was only $1,500 on Zillow. Well, that's associating an $80,000 down payment. So that's why it's really important to speak to a lender to go over those details. Because again, a lot of what you see online is unfortunately sometimes not reality.
Awesome. Thanks. Thank you both. All right. What would you expect to pay roughly for an appraisal? What's the average cost that consumers should expect?
So it's going to vary, really depending on loan program. You could see appraisals as low as 500. You could see appraisals as high as 850 if it's in a rural area. So it's really kind of dictated by the loan type, the property type. For example, if you're buying a multi-unit, then you'll see a higher appraisal cost for that because they have to do additional schedules on the appraisal. If you're getting an appraisal out in Western Maryland, where maybe it's a little more sparse and there's less appraisers to take the orders, they may have a higher premium to do appraisals out there. So, normally the further out you get into a rural area, the more expensive they can be. The closer you are to the metropolitan area, probably a little more economical because there's a higher demand and a wider appraiser pool out there. But that's kind of the range. And again, depending on the property type, that will dictate what the cost is. But I'd say on average, you might be looking at 550, 650 on an appraisal, depending on where you go.
Wonderful. Nikia, what are some recommendations with so many realtors in Maryland? How would you suggest consumers find a realtor that works best for them? What are some of those green flags they can look for?
Okay, well, that's a good question. I'd say some green flags are starting with the area that you want to move into. Okay, because the best realtor for you will really know the area that you want to move into. We're going to know how the homes are moving on the market. We're going to know, basically, the homes that are renovated, new construction, communities. We're gonna basically we well verse ourselves on history, accessibility, and things like that. So focus on where you want to go. And let's say, for instance, you want to go to Baltimore County, and you're in Baltimore County. You kind of do a search. You can look on the Maryland Realtors website. We have realtors listed there. As for me, I'm with the Women's Council of Realtors. So, we have websites there where you can kind of search different realtors depending on who you want to work with. I'd also say someone that has a green flag is presence. Like a lot of realtors might not like a lot of internet traffic or, because they're so busy with boots on the ground in their areas. But get with someone who hosts home buyer seminars in your area. I used to do them at local libraries and things. I do a lot of digital things now. Recommendations from your friends. I have repeat clients from repeat, referrals from clients and their friends. So that's where I get a lot of my business where I don't have to advertise as much. So those are a couple green flags that I say when looking for a realtor, and then look them up. You can look a realtor up, see the activity that we're doing. You can call the, Maryland Real Estate Commission. There's a bunch of things. And you can also contact me. I don't know if I put my information up with Douglas Realty. We do a lot of referrals and things like that, depending on where you want to go. So,
Wonderful. Thank you. All right. Two lightning questions, and then we're going to move on. Um, how does credit score affect buying a home, specifically for first-time home buyers?
Good question. So I guess that depends on a couple variables. When you're looking at government loans, FHA, VA, there's not a huge deviation in the interest rate based on credit score. A lot of the times, it's if you qualify for the rates and pricing are going to be very similar. That's on the FHA and VA loans. On conventional, it's a little bit different. That you will see a lot of variance in based on the credit score. So, you know, if you're looking at a conventional loan at the floor credit score of a 620, that's going to look a lot different than a conventional loan that has a credit score of a 780. In addition to, dictating what the interest rate's going to be, it's also going to dictate what some mortgage insurance premiums are going to be on conventional loans. So that's generally why on a conventional loan, you usually want to have, I'd say, maybe a 700 plus credit score if you're putting down a very nominal down payment. Uh, if you're looking at from that perspective, then you might want to look at a government loan because again, it's kind of black and white. It's you qualify or you don't a lot of the times, and there's not a large deviation between interest rate on the government loans for someone that has a 700 versus someone that has a 640.
All right. And then last question before we're moving on, really quick. What is an ideal amount for a first-time home buyer to save?
Well, that's pretty subjective. It really depends on your circumstances. If you're looking to mitigate your payment as much as possible, obviously the more you put down, the lower your mortgage payment is going to be. But honestly, these days, a lot of the consumers come in with 3% available if they have it. There's also a large basket of consumers that have no down payment available. Like, the Maryland Mortgage Program and NFM as a proprietary lender, we also offer some, down payment assistance programs where you don't necessarily need the down payment available or potentially even closing costs. Like we close transactions all the time. Love the cat, by the way. We close transactions all the time where consumers aren't bringing any down payment, and we are actually able to work with the realtor to facilitate some sort of seller credit where we're also paying their third party costs. So it really depends, but 3% is a pretty good rule of thumb. If you're looking, to put more down, you obviously can.
Wonderful. Okay. Thank you so much. All right. Unfortunately, our good friend Jim from Freddie Mac is not able to be here with us tonight. So I'm going to be really quickly going over their presentation. If you would like to see their full presentation, you are welcome to look at some of the recordings we have on our YouTube channel. Um, or if you'd like to come and join us in a month, you're also welcome to do that. All right. Let me share my screen real quick. All right, so first, what is Credit Smart? It is a entirely free financial education, financial literacy set of classes that you can take online. They are fully accessible. You can do them on your phone. They're interactive. They have videos and quizzes. You can start and stop them as frequently as you want, and they're in multiple languages as well. And all of this is to be able to give you as much education and information about buying a home and home ownership as possible in advance. So there are two different sides to it. There's the financial capability side that gives you financial knowledge and skills, and gives you different products and tools and resources for that. And there's the homebuyer education side on Homebuyer U. This is specifically geared for homebuyer financial readiness, helping you get ready to purchase your home and that ownership information and education, as well as the mortgage process and information about trying to make sure you're not heading into foreclosure at some point in the future. There's also Credit Smart Essentials, and that's to really learn a lot more about credit scores, how they work, and how they affect your financial health. So there's curated learning paths, there's progress trackers. This is a course that I also took when I was preparing to buy my home, and I highly recommend it. It does really give you a lot of information. And in some cases, it may be able to help you qualify and get a certificate, specifically the Homebuyer U, if that was unclear. Sorry. That they may be able to help you qualify for different loan programs and grants. So there are different learning paths. There's set goals to guide. There's earning and then spending, how to be a savvy borrower, planning to save, and then preparing and protecting, specifically making sure that you are stable in your financial future, which I know we all of us here want. And yeah, so the Credit Smart Homebuyer U is really, really great. It has helps you qualify for the Freddie Mac Home Possible or Home One mortgage, um, and it's recognized by a lot of other different programs as well. And it's available in English and Spanish. Please, if you're interested in this, if any of this sound like it could be great for you, please go check it out. These slides and the links in them will be shared with you after this presentation, likely tomorrow morning. So if you're interested, go ahead and check out Freddie Mac. They are not a lender. They are not someone that you would be working with to get the loan. They are here to do education and to make sure you know what home ownership and a mortgage would mean for you. With that, I'm going to pass it over to Catherine from the Maryland Mortgage Program.
Hi, everyone. How are you? Okay, my name is Catherine Kramer-Dale. I'm with the State of Maryland Department of Housing with the Maryland Mortgage Program. I'm going to share my screen. Here we go. We are a state agency. We are the State of Maryland Department of Housing and Community Development Administration. And the flow of this presentation is perfect because you definitely want to find an agent, but you definitely want to meet with Kevin. Kevin is, NFM is one of our top performing lenders. So I specifically asked Kevin to come on to do the presentation because he knows this program and his staff knows this program with their eyes closed. When you go to meet with Kevin as one of our approved Maryland Mortgage Program lenders, they're going to ask for everything in the kitchen sink. Sorry, Kevin, but they're going to ask for your pay stubs and your W-2s and your tax returns, and they're going to pull your credit, and they're going to ask for, a couple of months of your current bank statements, and they're going to determine how much of a house you're eligible to purchase. And then once you get that pre-approval letter from Kevin, you go out shopping with our agent that's on this call and you find the house that you're looking for. Well, then you go back to Kevin and say, okay, I found the house. I have a pre-approval, right? I really would like to take advantage of some money that's out there. I don't have enough money saved. That's where the Maryland Mortgage Program comes in. You don't come to our state agency and apply directly. You would go through one of our approved lenders. So you would go back to Kevin and say, I've got the pre-approval. Nikki helped me find a property and I'm ready to move forward. And Kevin will then ask you, are you a first-time home buyer or not? Making sure that you don't exceed our household income, making sure that you don't have a lot of money, because if you have a lot of money, then you don't need to use our program, right? Making sure you complete home buyer education. And then he verifies that you're meeting our DTI and our credit score, which he's pretty much already done, right? When he gave you the pre-approval. This website right here, www.mmp.maryland, Maryland, it's a public website. It was actually designed for our lenders because we value that partnership that we have with them and we want them to be comfortable with originating the products, having their operations staff, like their processors and underwriters, know how to submit the packages to us, and their closers so we can get your loan closed when you're ready to close. Well, we also have to look at the file to make sure, hey, what are you looking for? How much money do you need? So on this website, you can click right here to interest rates and you can have this conversation. And Kevin's probably already looking at it and saying, all right, how much money do you need for down payment and closing cost? The state of Maryland has several programs for all of our first time home buyers. This is public information. All of our first time home buyers have all of these products that they can take advantage of. We have products here that Kevin and his staff can do. Not all of our lenders can do these. He's one of our top performing lenders, the Maryland Home Ability. If you are someone disabled or caring for a disabled individual, we have a program called the Maryland Home Ability. We have a program called the Maryland Smart Buy. Let's say you're someone on this call and you're like, man, I got student loan debt that I got to try to pay off. I want to buy a house, so I got to save for that. Well, the Maryland Smart Buy is a program where we're going to give you money to help you with your down payment and closing cost, but then we're also going to help pay off your student loan debt. Kevin can go over that with you to see if this is a good product for you to select. There are some qualifying guidelines that you have to meet. Then we have two products, and this Montgomery County homeownership just rolled out like a day ago. The Montgomery County employee, so if there's anyone on this call that wants to buy in Montgomery County, you meet our guidelines, there's 6 of them, and you're looking for down payment and closing cost assistance, this is perfect. The Montgomery County Employee Program. If you are just wanting to purchase in Montgomery County, but you don't work for a Montgomery County agency, city, county, whatever, then here's the Montgomery County homeownership. With these two programs, the employee program, you get $25,000 of down payment and closing cost assistance. Now, all of our down payment assistance is a loan. These are the interest rates for the first mortgage. That's how Kevin calculates your payment, your principal, your interest, your taxes, and insurance. For that 25 grand, it's a loan, but you don't make any payments on it. You don't pay any interest on it. It just kind of sits there like a silent little loan. We call it a silent lien, and you have to pay it back when you sell or refi. The Montgomery County homeownership, it's calculated up to 40% of your borrower's qualifying income. It could go up to a max of 25,000. Then we have these standard products. If you have a gift, if you're going to pull money out of your 401 or retirement, you get enough, Kevin and the agent, Nikki, get enough seller help. Maybe you don't need any money from us, but this interest rate is certainly very pretty, right? You might say, hey, I don't need any money from the state because I have other sources to get money, but I want to do the first time advantage direct and get the lowest rate that's out there on the street. Or maybe I do need money. You could get $6,000 or 3% of your total first mortgage, round down, no change, or 4%. The most popular, which is like winner, winner, chicken dinner, is 5% of your total first mortgage, round down, no change. That's a lot of money. So when you were asking the question and Kevin answered about, how much money should you really save? Yes, you should have at least 3%. But with a lot of our programs, it's providing you enough money where you may not need to bring your pocketbook or your checkbook. Kevin will go over all of that with you. These programs are available to you through the state of Maryland Department of Housing and Community Development. We are branding these products as the Maryland Mortgage Program. The lender you apply directly with, they determine that you meet FHA, VA, USDA, and conventional guidelines. And then they say, hey, go look for a house. We've given you a pre-approval. Come back. We'll play with the numbers, see where we come in at. And if you need some money to help you with your down payment and closing cost, NFM Lending is one of our top performing lenders, and Kevin and his staff are phenomenal. They'll be able to get your loan closed and you'll have some down payment assistance. A lot of people are thinking, "Oh, I have good credit and I'm paying my bills on time and I have a couple $100 or maybe $2,000 or $3,000 saved." That's great. But I'm afraid that I'm not ready to purchase because I don't have like $8,000 saved. Well, that's where the state of Maryland and the Maryland Mortgage Program products come in line. It's a very, very popular product. We want you to take advantage of it. And really, honestly, there's not a whole lot much more I can say about the Maryland Mortgage Program. The lender will guide you as to what you need to do and what they need to do to make sure you qualify. And then they pick whichever product that they think is, most beneficial for you. That's it.
Thank you so much, Catherine.
You're
Now, one
welcome.
question did just come in, and I know you've already answered it. It was, are there any grants for first-time home buyers? And the answer is definitely yes. And a good
Well,
lender
yeah.
will
Yeah.
help you.
Yeah. Kevin can even answer this too. The Maryland Mortgage Program currently is not offering any grants. A grant is defined as money that is free, forgiven. You don't have to pay back. The Maryland Mortgage Program, we don't charge you any interest on the money that you borrow from us for your down payment and closing cost. You don't have to make any monthly payments on it. So these are all fixed 30s. So if you stayed in your house a year, 5 years, 10 years, 30 years, if you sell or refinance your house, you have to pay off your mortgage and you have to pay off the down payment assistance that you borrowed from us. But we didn't charge you any interest. Kevin can pop on because they do have programs as a large lender that can offer you an array of products. And you can use us, and sometimes you can even use other products, and we call it stacking, where you can bring them both, all these little buckets of money out there. And I know Kevin knows too, because you've got the federal government, which is HUD, you've got us, which is the state. And maybe you all don't know, but the city and the county that you're interested in purchasing in also has Department of Housing, and they have funding to help you. It's an incentive to help you buy in that city or county. So, Kevin, you can definitely jump on that because we'll allow you to stack, bring more money. Go for it, Kevin. You're muted. Okay,
Sorry.
there we go. Good.
Yeah, that's again why I reiterate it's super important to get pre-qualified because that's a pretty comprehensive outline of a lot of the programs, and it's a lot, right, to take in. And dealing with the lender directly allows us to look at your situation holistically, go through every loan program, and pretty much figure out what the best qualifying program is for you. Because, like Catherine said, there are grant programs potentially we could look at. There are down payment assistance programs we could look at. There are core loan products that neither offer a grant or down payment assistance that may offer lower interest rates if if your payment is the primary concern. So that's all part of that pre-qualification process for us
Yep.
to really determine like what is the best fitting program for you. So that's why it's the most important part of the process. Typically, it's very easy to contact a realtor and go look at a home, but the last thing you want to do is look at a home and really not understand what you should do to purchase that as far as the loan program, down payment, what grants can I get. And if you do all that on the front end, it makes the real estate agent's job a lot easier for their search and pulling properties for you because they can craft a much better MLS search for you if they know exactly what you qualify for. So again, just reiterate that it's an easy process. Trust me on it. It's a necessary front end part of the process.
Yeah. And I'll just say too, because I have a daughter and she's 30 some years old, and I know she's anxious to be a first time home buyer. Talk to the lender. Don't be talking to your friends because everybody's needs are different. So what's good for John and Sue may not be good for you, and you don't want to get fixated on the fact that, oh, I'm not going to be able to do that. The
Yeah,
lender, Kevin, will directly look at what you are looking for, what you're asking for, and then he'll look at what you have as far as the assets, the income, your debt, and then you guys kind of have a come to Jesus meeting because then he's going to tell you this is what you want, this is what you have,
yeah.
this is the best fit for you. And everybody's needs are different. So please, you know, definitely share and talk about how amazing the experience is, but everybody's needs are different. So you can't compare yourself to other people when they're looking for their loans. Okay?
And that's
Agreed.
why y'all are the experts.
Yeah. And we all
All
work
right.
very well together. So, if you need something, we're going to refer you to each other. We all work very well. We all have very strong partnerships.
Thank you so much. All right. Last question right now is how long is an approval letter good for?
Go ahead,
Good
Kevin.
question. Well, our credit reports are good for 120 days. So, I would say it's kind of subjective to the loan officer, right? I would say at least a few months, right? Unless anything materially changes, meaning your employment changes, or you get a reduction in payroll, or you lose your job, or all of those events could obviously affect your approval. But typically, we'll look at a credit report. It's good for 120 days, as long as your income or anything of materially doesn't change. Then we're pretty comfortable, working with what we have for that time frame.
And you know what? I want to bring up something else too. And Kevin, I apologize if you did mention it, but if there's anyone on this call that right off the bat, they know that their credit score is probably not the greatest, don't let that stop you. The lenders will look at what your credit score is, and then they'll guide you on what you need to pay off or what you don't need to pay off in order to qualify. So if your credit score isn't as great as you feel like it needs to be, still reach out to the lender because they can work with you on a goal of getting your credit repaired and where it needs to be so that you can achieve that dream.
Yeah, and those are some of the best relationships we've had, because it gives you time to get to know each other, and it builds a good trust level, right? Some consumers can be very fickle, and they're on to the next lender, the next one, the next one. But if the lender's going to take the time to work and advise and get you where you need to be, it builds a pretty good relationship. And from our perspective, it also builds us a very good referral base, right? Because if we've done so much work with you, people tend to appreciate that. So, I wouldn't be concerned about applying if you think, you may not qualify. You really need us to kind of tell you, if you do or you don't, and then advise on where you go from there. And then, one nice thing that we offer is called the Home Stretch app, where it's basically a consumer app that you can go on and register for free. You can track your own credit. You can analyze your own credit up or down to see how it would increase depending on paying off debts. You can estimate your home readiness. You can also search properties on the MLS, so you don't have to skip across Realtor.com and Zillow and field 50 different phone calls from applying 7 different times. It's one central location for a consumer to look at everything. It keeps people much more focused.
Wonderful. All right. I see no more questions coming in. So with that, oh wait, or did one just come in? One just came in. Uh,
They're excited.
wh which credit bureau will the lenders look at more critically?
Well, we look at the middle score. So, we're pulling the FICO in all 3 credit bureaus, the TransUnion, Equifax, Experian, but we're going to go based on the middle of the 3 credit scores. So, for example, if you've got a 700, a 600, and a 650, we're going to use the 650 credit score on most of our programs. Um, Yeah, and that's pretty standard across the industry. There are a few different models that different lenders use, FICO versus Vantage, et cetera, et cetera. But for the most part, a lot of lenders are in a very similar ball game. And to that point, I would say one thing I think is important to know about is when you're looking at your own credit score versus a credit score that a lender is pulling on a tri-merge credit report, you're definitely going to see a disparity between a consumer credit report and a lender tri-merge credit report. You can see a difference of anywhere from 20 to 30, even 40 points, depending on you know the 2 reports. The credit score that you're monitoring through Experian or any of those third-party sources, more of a generic score. So when we pull a full tri-merge credit report, it's much more detailed, and there is going to be some variance between your consumer credit report and our lending report. Very common question that people have, because when we run credit, they say, well, wait a minute, I thought I had a 660. You're telling me I have, a 645. I don't understand what the difference is.
Right. Because they're looking at Credit Karma or something.
Right. It's going to be more of a generic score. Or maybe they pulled it at a later date, and credit scores are fluid. They change based on your utilization all the time.
Wonderful. Thank you all so much. And thank you all for your attendance. As a reminder, our next Your Home Buying Keys webinar will be on September 18th from 6:30 to 7:30. And please share that day with anyone you think would benefit from the information or another soon-to-be home buyer in Maryland. We would love any feedback you have to give us on this webinar. I've just sent a link in the chat, and if you click on it to fill out a short Google form, that would help us improve this webinar for future homeowners. Be sure to check out marylandhomeownership.com for more resources and information on homeownership. We wish you all the success in your journey, and if you have any questions, please email us at webinar@mdrealtor.org. Have a wonderful evening, everyone.
Goodbye.
Bye. Thank you.